Welcome to GP Bullhound's Tech Thoughts. Today is the 23rd of April, and we are here with Inge Heydorn and Johan Roslund for our weekly market roundup. Today, we will be covering earnings reports, including Netflix, and looking towards a very busy next week when most of the tech giants, such as Microsoft, Amazon, and Apple, release their reports. Over to them.
Let's start a little bit on the market. The market has just been on hold, waiting a little bit to see what the Q1 reports will come out with. Then it took a little bit of downbeat yesterday, given the fact that we had rumors about Biden administration increasing capital gains tax to even over 40%, which would clearly have a negative effect on the market. But give you some of our thoughts for the moment. We have always talked about Q1 being very, very strong, a little bit worried about the guidance on Q2 as we would see a lot of end of lockdowns and thereby tough comparisons. Given the fact that the vaccinations and so are delayed, I would state that it's turned a little bit more positive for the tech companies benefiting from work from home and than we expected. So if anything, I would say the work from home stocks would benefit more than we thought earlier for Q2. So delaying a little bit of this unlocking of the societies into Q3 really. So that's the read through of what we've seen so far in the second quarter.
It's a really interesting market that we have. We have so many different factors. We had the interest rate going up. Now we have this tax, and it's just rumors, I think, from Bloomberg yet. But the take there is if you increase capital gains tax, you will also see selling winners before it ends up. So that could be a pretty tough effect for the shares gain the most. But we also had a pretty interesting report from Netflix, and I will pull up some numbers here. So the share got pretty heavily beaten this week, down 7%, but it was down 11% at most after trading. And you can see this pretty clearly on this graph. So top blue line is last year's intake of new subscribers. And you could see the COVID effect there in March. But if you look at the lowest line, you have the current year and also the outlook for the current year. And it's way, way below last year. Inge, what's your take on this?
I don't know how to state, but I would say it's probably the first COVID case in that sense in technology, meaning that's the first case we've seen now which really getting tough comparison, and thereby the growth is coming down in the short run. Then we'll see if it rebounds when it gets easy comparison. But just on that also, MPD numbers, so US video game sales came out for March on Friday, and it was up 14.5% in March. So video game sales, yes, the growth is coming down, but it's holding up, I would say, clearly stronger than most people has expected. So it will be really, really interesting to look at April numbers coming also.
Yeah, and my long-term take on Netflix is that they will be a really successful company in all entertainment. So maybe in a few years, maybe they will move into something that is closer to games, that all kinds of video and games just merge together. But they say in their report, and to the defense, that the guidance for the first half of 2021 is pretty low because they don't have a lot of new content coming out. So that's another COVID effect that was halted a bit last year. But the second half, they say, is pretty strong, and they have, for the people that like Casa de Papel, there will be some new content there, which is nice. We also had some semiconductor updates and reports this week, Inge.
Yes, as you know, we've been banging the drum quite hard on semi-capital equipment stocks, and I think a lot of people now are coming out and wondering how far this will go, how long will this shortage last. And let's break it down to two things now, so it make it a little bit easier, because a lot of people now are coming out and saying this is a semiconductor cycle and so on. Yes, it is, but it's two different cycles. So, and I think it's important to understand the two of them. If we start with a simple one, the first one is driven really by economy recovery. So the car industry, the low node, 20 nanometers, 8 nanometers, and so on. And also pushed further by the fact that you had US regulation stopping SMIC to build capacity in China. So that's the first one. And that's going to be, so that, driven by the economy, how far or fast the economy will grow. But the second part of this story, which is even more important, is the drive of the lower nodes. And that's not going to stop even if the economy would slow down. So this is just driven by innovation and also the structure of the industry. So looking at the structure of the industry and also the tools that are out there, everybody sold out for 2021 and into 2022 on the tool side. So there is no extra tools to be bought in the industry. The fact that everybody is building 5-7 nanometer chips now and want capacity, that's not going to end. Even if the economy stands still or we start to have a negative GDP growth, we are going to have growth for equipment stock on that and the most important side of their business. Even I would not be surprised even into 2024. So keep that in mind when you look at people starting calling it semi-cycle. It's not just one cycle, it's two different cycles, one driven by economy and I would say commodity chips, and one on the leading edge. So in conclusion, I'm very, very positive towards ASML, AMAT, Lam Research, and KLA, which reports next week. So those are the ones we follow very, very closely.
Yeah, moving into next week, there will be a lot of reports and a lot of really big tech reports. So you and me, Inge, will probably not have a lot of sleep next week. It begins actually Monday. Tesla comes, but we're not invested in them. But on Tuesday, you have Microsoft, Alphabet, and also Pinterest that we like, a bit smaller company, but still really interesting. Midweek Wednesday, we have Facebook, Spotify, Apple, and it's a bit interesting that they report the same day. This is just coincidence, but Apple talked this week around their new podcast, both that the app will be updated, but also that you will be able to subscribe and it's easier with ads, etc. But Facebook also revealed that they will have a closer cooperation with Spotify, and they will really have more products when it comes to discover podcasts. And Facebook will also be launching a clone of Clubhouse. And last in the week, so Thursday, because we don't have a lot of reports on Friday, but on Thursday we have Amazon, Twitter, and as Inge mentioned, KLA. Any of these companies that you think we should look a bit extra at, Inge?
I would say all of them are very, very interesting, and especially when it comes to, as you said, also the Apple and Facebook fight against each other regarding EDFA and so on. That's going to be really, really interesting to see what Google says about it. And as you had Facebook, you have Apple, Amazon, and Spotify, all of them in the same week. And regarding that, as you know, Google has also changed the rule regarding marketing and also launched new internal tools for external marketing. And I don't know if you saw that last week. Now Apple is also changing on their commercials on the apps. So now we can do more commercials on the apps. When everybody else is struggling on the changes, they are increasing their territory. So very, very interesting week to come.
Yeah, if you control the platform, it's pretty good for your business, unless the regulators will say something different. Great. Looking forward to next week. Thank you, Inge. And thank you, Maria.